Welcome to the AACFB's 2025 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I will be your host. Our presenters today are Ismael Santiago, Matt Morrison, and Steve Whitman from Quality Equipment Finance. Quality Equipment Finance is both a funding source member and a silver sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce the quality team, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit them in the box and they will be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. And for those of you who would like to review it at a later date, it will be posted on the 2025 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I'll turn it over to the quality team. It's all yours.
Hi, thank you for everybody that's here today. My name's Stephen Whitman. I'm going to run over a little bit of the history and background of quality. If the screen will change, there we go. The contact information on the call today is myself, Stephen, Matt Morrison, and Ish Santiago. All three of us will be covering different components of what quality has to offer. I'll start with a little background on Quality. So Quality Equipment Finance was founded in 1957 as a consumer auto financing operation. In 1986, the Tom Wood Group acquired the company, and we are now 100% owned by Jeff Wood. Quality is a truly independent direct lender offering equipment finance to small and mid-sized businesses in the B and C credit space. We fund nationally to all states except for Hawaii, and we're headquartered in Carmel, Indiana, which is a suburb of Indianapolis. In the industry, we're known for doing over-the-road trucking, but currently we are actively focusing on growing our non-OTR and non-titled portfolio. 4 core values that Quality Equipment Finance factors into our everyday life. We're humbly confident, passionately driven. We have uncompromising integrity and a sincere desire to help others. How we factor this in is our goal as a team is to offer products that we truly believe in to continuously improve our process. We're committed to delivering honest products with the ultimate goal of helping our customers grow their businesses. Our underwriting model is a whole story underwriting, meaning we'll look at the business history and guarantor experience, whether that be at their current employer or a previous employer. So if you've worked in construction for 5 years and you're a startup and you have proof of that 5 years of experience, that would get added to the whole story of the underwriting. Obviously, we'll look at the personal and business credit history. We would pull pay nets and credit bureau reports on the business and the personal guarantors. When it comes to income, we would be verifying, deposits on bank statements and the tax returns if needed. And then we're also looking at your current debt. So whatever is reporting to PayNet and your credit bureau report, we're looking to see that your banking covers those debts plus any future debts to see whether or not you're growing too fast or you can take on new debt. Liquid reserves. So when we're reviewing banks, we want to see that you have the funds to cover any down payment requirements, and that you can cover the future monthly debt should we approve a transaction. Another part of the underwriting whole story is the asset type. If an asset is highly remarketable, that's a plus. If it's, kind of a niche item, then, that might affect the story in a different way, and we would lean heavily on, maybe your personal credit or previous business credit. Just a couple things that we do. So our transaction size are 30,000 to $1 million. We'll do EFAs and term residual leases. Term residual leases mainly come up where there's usury restrictions. The vast majority of our transactions are equipment finance agreements. We'll do 12 to 72-month terms. 72-month terms are offered for new equipment only. Uh, if it's a titled asset, the mileage would dictate the term. We fund nationally, like I already said, except Hawaii. We're looking at A and C credit profiles, and our interest rate range is 14 to 25% on average. We'll do refis, cashback EFAs, lender payoffs, and we'll look at both titled and non-titled new and used equipment. A few things that sets quality apart from other independent direct lenders. We'll do private party sales. We'll do startups with experience. So startups would have to have 2 years of experience that's verifiable on the tax returns. We do not have an age restriction on collateral. If it's titled, the mileage comes into play and can affect the term. We report to PayNet, so your young businesses can build their business credit to help them down the road. We predominantly use DocuSign and e-notary where states allow electronic POAs. That's a cool tool that we have at our disposal. It allows customers to seamlessly log on, get an electronic POA done, and you're not sending something UPS next day air and potentially losing it and delaying the titling process. We do not have volume requirements for any of our broker partners that we work with, and all of our broker partners would have a dedicated sales rep for fast responses. And we are specifically just a third-party originator. And with that, I'll pass it off to Matt, who's going to run over assets and our programs.
Thanks, Stephen. As you mentioned at the top of the phone call, I think primarily in the past, quality equipment finance has been known for OTR and titled equipment lending. However, we are on a daily basis funding a variety of different assets, both in the titled and non-titled space. Specifically on the non-titled asset side of things, we're looking at serialized type of equipment, both new and used, from construction equipment to manufacturing to woodworking, laser imaging, all the way down to packaging. Some of these industries qualify app only. Others, as you see on the screen, such as oil and gas, let's say with restrictions, do come with a full financial package requirement. But those are assets and industries that we do not shy away from. And then on your titled side of things, obviously we are still doing OTR equipment, but we'll do a wide range of vocational types of trucks, dump trucks, transit vans, SUVs, things of that nature, both new and used. What's unique about our program on the titled side of things is we go by mileage instead of a year cutoff. Factoring that in with a private party type of a sale, you might run into situations with a customer where they are able to find an older vehicle with lesser mileage that some other lenders might say no to just based on age restriction. The majority of the deals that we submit are app or app only or app plus banks, as you see from the internal jargon of EasyQ or EasyQ plus. Typical submission that we get is application, equipment cost, and specs. Specs are especially helpful for both new and used title equipment. They let us run down comps, VINs, check Carfax, things of that nature to make sure that the approvals or the credit decisions that we're sending out to you are the most firm credit decisions we can for you to present to the customer. On our EasyQ and EasyQ Plus scoring method, we look at average FICO score, revolving availability, time in business, PayNet score, and we also consider risk view score as well. Most of the approvals that we do send out go out with one payment in advance. However, there is a large, or not large, but a portion of our credit scoring model that does factor in equity, a willingness to make a down payment of 10 to 20% for a customer that may be shy on time in business, light on credit. So for our EasyQ and EasyQ Plus underwriting guidelines, the minimum time in business is 2 years time in business, a FICO score of 650 and a PayNet of 600. On these types of programs, and what this chart references is typically a non-OTR transaction. So these are your skid steers, dump trucks, that type of thing, where we're looking for a comp of 30%. That comp can be personal or pay net, paid within the last 3 years, 12 months on time, and they can be stacked. So it is worth mentioning that it doesn't have to be a one-for-one comp. It could be a blend of a pay net and a personal comp to get to where your request is. In the situations where we do require bank statements, we have enough information on our end as sales reps to let you know ahead of time whether you're going to need them. Like we'll underwrite the deal, score it out, and let you know whether or not this deal might need banks. When we're looking for banks, we're looking for 10K ending reserves, and ideally no overdrafts, no NSFs, no MCAs, no working capital. And then on our true full financial type of deals, these would be required for deals over 150K, trucking deals over 75K, or for startups as well. Those deals we're looking for ideally 2 years of personal tax returns and the 2 most recent years of business tax returns, in addition to 3 months of bank statements. With the difference between our non-OTR and our OTR trucking guidelines is we're looking for a 50% comp on OTR. Again, that is also stackable between paynet and personal. And we're looking for a 15K ending balance reserve for trucking deals as well. With that said, I'm going to pass it off to Ish.
Yeah, so this is our submission checklist for any deal that is basically for what we consider a non-OTR transaction or a non-title or vocational piece of equipment, or anything over 150 up to 250. And then on the OTR space, anything over 75 up to 250 this is what's required when sending in a submission. We don't have a portal or anything like that, so you're actually going to send these items directly to your sales rep. We find that offers a better experience for you, quicker response times, and things of that sort. So within that package for, again, over either 150 or 75 up to 250, we like a write-up. Again, with our whole story approach, this is very important to have with the package so we understand the full scenario of why the customer is buying the equipment, how it's going to help them, and any other variables that are important to the deal. We do require a completed credit application and authorization, equipment pricing with an invoice and specs. Again, for deals that are over that 150 for non-OTR, we do want to see 3 months of the most recent bank statements, preferably for the business, but if they also have a savings account in their personal account, we will look at that as well. We're also going to ask for the last 2 years of federal and for business and personal tax returns. And the last item for that would be year-to-date P&L and balance sheet. And again, this will get you up to $250,000 in an approval. See if you can hit the next slide. And then we do have transactions, again, up to $1 million. So if it's over 250 and under 1 million, the only additional items that we would ask is personal guarantors, personal financial statement, last 2 years of business financial statements, debt schedule with a list of current leases and loans, and then a client list broken down by a percentage of client business. And then again, any additional information you believe will help us understand the transaction or the customer, which again goes back to the importance of our write-up. See if we can go to the next page. Again, this is basically showing you a step-by-step of how we kind of run through a deal. Again, you have a dedicated sales rep, so you would email them the submission. Then we would review it, ask you any questions about the deal, let you know if it is a deal that isn't score high enough for app-only program, request bank statements. If there's any questions about the collateral, we'll get that all up front. We'll wait for your response and get the answers to add that to the submission. Then we submit everything to credit. And then once submitted to credit, it's typically a same-day approval. Usually within 24 hours, you will get a response. And then again, we will send you an offer letter with a decision that says, approval, decline, or ask any additional questions that underwriting might have. In the offer letter, it'll basically outline everything possible. So it'll tell you if the customer will tell you the payments. We'll let you know how much your commission is included in that. If we need the DL, inspection, invoice, all the pertinent details to get the deal to go to docs is all going to be listed on your offer letter, as well as all the items that we'll need for funding. We take a lot of pride in our fast funding, which I'll explain a little bit later on. If you do close the deal and you send us all these items, and it'll go to documentation, that's typically sent to the customer within 4 hours. And again, we are utilizing DocuSign, e-notary in states that allow it. And then once all of that is completed, then we get to funding. Again, with using DocuSign and e-notary, we also don't require insurance, even on a title vehicle, for funding. So it's not uncommon for us to fund a deal within 24 hours. And then you also get paid your commission at the time of funding. So there's no waiting for a title or anything like that. As soon as we pay the vendor, you'll receive your commission at the same time. And this is a big update for us this year. We've actually increased our point allotment. So for 10,000 to 50,000, you can build in up to 10 points. 50,000 and 150, you get built into 8 points. You can build in 8 points. 150 to 350 is 6, and anything over 350 is 3 points. We also have a quarterly bonus program. So if you're able to fund between 400 and 850 in a single quarter, you get to add an additional point that following quarter. And if you do 850 or higher in one quarter, you get to add an additional 2 extra points to the next quarter. So that would basically take it to up to 12, 10, 8, and 5 points if you do fund 850 in a quarter. So that's our whole presentation. Again, this is our contact information for myself, Stephen, and Matt. Monica, I wanted to check in with you to see if you have any questions at this time.
We don't have any questions yet, but I want to remind everyone, if you have a question, now is the time to go ahead and put those in the Q&A box and we'll get them answered. So we'll give them just a few minutes to get any questions in before we wrap up. You may have said this, are each of you dealing with different parts of the country, or does it matter who they talk to?
No, any one of us would be happy to help. We don't have any kind of jurisdictions or anything like that. So you're more than welcome to reach out to any of us for support. Okay.
We have a question. What is the process to become a broker partner with Quality?
You could just send us an email. We would ask for a resume, and we can send you back a broker application and a just our agreement. So it's very easy, and we can typically get you approved within a day or two, if not faster.
Great. Do you do seasonal payments?
We do not do seasonal payments. Okay.
We'll give it just a couple minutes to see if anybody has any other questions. Says, I may have missed this, but would you consider med spa and aesthetic equipment such as lasers?
Unfortunately, we do not. We used to be in that space, but unfortunately, we're no longer in that space.
Okay. What is the turnaround time typically for deals over 250 million, it looks like? Or says
I think they meant 1,000. So our max is 1 million, but anything over 250, it's still typically 24 hours. The closer you get to 1 million, I would say I would give us a little bit more time to review the deal, but definitely within 48 hours.
Okay. Do you consider commercial food service?
Yes.
Okay. How do you handle mileage if the truck has a rebuilt engine?
So we just ask for all the documentation showing that it was done. We prefer that it was done at a OEM shop, not that it's a requirement, but we need to see the mileage listed on the paid invoice and it can't be more than 200,000 miles since the overhaul in order to qualify as well. But as long as we have the paperwork, it's typically pretty easy.
Who do you think owns Quality?
Jeff Wood.
Jeff Wood.
It's the Tom Wood Group, as he's the president of that. So we are an independent lender.
Okay. Do you consider glider kits?
Yes, we do.
Great. What would be the perfect cookie cutter deal equipment for Quality? What's your sweet spot, I guess?
I mean, that's kind of hard to answer because we do cover such a big range. Obviously, our focus right now would be more that non-OTR space, which again is a wide range. So I mean, anything in manufacturing, anything in construction, landscaping, we really are emphasizing doing more of those kinds of transactions. So anything in those spaces, I would say is pretty easy, especially with now in that space allowing up to 150,000 as app only. That's kind of what we would look for. with at least 2 years time in business. If we're looking for a cookie cutter deal, 2 years time in business and equipment that is under $150,000, I think would be our sweet spot in that non-OTR space.
Where can we find details on programs?
You can email any one of us and we can send it to you right away.
Great. Do you do dental equipment?
Yes, we do. Yeah, we do anything in the medical space, which we would include that in. If it's doctors, veterinarians is another one that we do, and dental.
Great. Good questions. We see here comes another. How do you release funds? Wire, ACH, check, or all the above? If checks, are they overnighted?
Everything is done with a wire, even our commissions.
Okay. Do you give the option of the other ones, or that's just your preference?
Right now we're only offering wire transfers, but we also see that's a lot faster, where ACH typically doesn't hit till next day. So we want to get out the funds to the vendor and our broker partners as quick as possible.
Okay. Would you consider RV park model trailers?
That would be a kind of a unique one. I would say it's a case by case, but it would be something that we'd be happy to look at.
Okay. You do hard pulls or soft pulls?
So at the time of review, we'll do a soft pull on TransUnion and Experian. And then if the deal does end up funding, we will do a hard pull on both of those bureaus as well.
Okay. Do you do cannabis equipment?
Unfortunately, cannabis equipment right now is another restricted industry.
Okay. Vending equipment?
I'm not sure that I'm too familiar with vending equipment. I think that would be a case-by-case situation and also depending on the cost of the asset. But I wouldn't say no, I would just depend on the customer and credit quality, things of that sort.
Okay. Do you charge interim rent after the first payment is made in advance?
We do have pro rata. We typically try to make it as easy as possible for the customer where that doesn't come into play. We offer 3 different options as far as when the customer can pick their payment, and our goal is not to, but if there is a unique situation, then there is a pro rata that is calculated.
Do you report to the bureaus after the deal books?
We do report to PayNet.
Okay. Will you accept the broker's soft pull?
We'll review it, but all of our decisions are based off of our credit bureaus.
Okay. The next one, will you be attending the AACFB conference? I don't know if they're talking about the expo or the annual conference next year, but they will be at the.
I'm sure we'll be at both. So myself, Matt, and Pat O'Connor are going to be attending the one in Austin in September. So I look forward to seeing everybody at that time. But I'm sure we'll be at the one next year as well.
Yep. And we'll be in Orlando, Florida next May for the annual. What kind of technology do you use?
We're actually taking a lot of advances this year in technology, whether that's our CRM that is pretty robust now. We also use different types of systems to analyze customers' bank statements just to make sure that we're not getting caught into any fraudulent transactions. We also use, again, DocuSign and eNotary, which help expedite our funding process, which we take a lot of pride in. And again, we don't require insurance, which is a big time saver, particularly on title equipment. And we continue to use more technology to our advantage just to basically get you credit decisions quicker.
Okay. And what did you say your turnaround time is for approvals?
Within 24 hours.
Okay. And no doc fees up front, but are there fees later?
So we do charge a doc fee, but we include in financing. If the customer prefers paying that up front, then we have that option as well. And there are no fees later in the loan.
Okay. Great. Let's give it a second in case we have any other questions. We've had a great feedback from the attendees here. A lot of information. All right, I am not seeing any other questions. Oh, here we go. Do you do term residuals?
So we do term residual leases. I think Steve had made mention of this. Majority of our loans are going to be equipment finance agreements, but there are some states that, based on usury laws that we will be able to do a term residual lease.
Great. All right, with that, we will wrap things up. I want to say a big thanks to all of our participants and our special valued funding source member and silver sponsor, Quality Equipment Finance. Thanks for a great job, everyone. We do invite everyone to meet with Quality in person at the Commercial Financing Expo coming up this September in Austin, Texas. Thanks again and have a great day.
Thank you.
Thank you.